Let me ask you something real quick. What if I told you that right now, today, there is a brand new IRS rule on the books that could put thousands of dollars back in your pocket this year? And the overwhelming majority of seniors in this country have absolutely no idea it even exists. Not because it's complicated, not because it's buried in some 200-page legal document, but simply because nobody told them. Nobody sat down and explained it in plain, everyday language. Well, that changes today, because that's exactly what we're going to do right here, right now, on Professor Kingsley. So if you are 65 or older, or if you're getting close to that age, or if you have a parent or a spouse or a sibling who's a senior, you are going to want to stay with me all the way to the end of this video, because what I'm about to share with you is directly from the IRS. It is completely legal. It applies to tax year 2025 right through 2028, and it could mean real money back in your real life. Money that belongs to you. Money the IRS says you can keep if you know how to claim it. So let's get into it. Stay with me. Now, before we go any further, if you're new here, welcome to Professor Kingsley. This channel is built for everyday Americans who want to understand how money, taxes, and financial rules actually work, without the confusing jargon, without the legal mumbo-jumbo, and without anyone talking down to you. We break things down the way a good neighbor would explain it over a cup of coffee. If that sounds like what you've been looking for, hit that subscribe button right now and turn on your notifications so you never miss a video. Because we put out content like this every single week, and trust me, you don't want to fall behind on this stuff. It costs money when you do. Now back to what we were talking about, this brand new IRS rule. Let me set the scene for you so you understand just how big this actually is. There are roughly 48 million Americans over the age of 65 who are currently retired, according to the Bureau of Labor Statistics, and more than 17 million of those seniors are economically insecure, living at or below 200% of the federal poverty level. And according to AARP, a huge portion of those seniors are either unaware of this new tax benefit, or they've heard about it but don't fully understand how it works or whether it applies to them. That's a problem. Because this isn't some loophole. This isn't a gray area. This is a legitimate deduction that Congress passed into law, the President signed, and the IRS has officially confirmed. It is sitting right there on the IRS website, available to any qualifying senior who files a return for tax year 2025. And here's the thing that really gets me. According to the Tax Policy Center, fewer than half of older adults are expected to benefit from this new senior deduction. Fewer than half. Which means right now, as you're watching this, there are millions of seniors across this country who are leaving money on the table. Real money. Not a few bucks here and there. We're talking about up to $6,000 for a single filer. We're talking about up to $12,000 for a married couple where both spouses qualify. That is not a small number. For someone living on a fixed income, Social Security, a pension, maybe a little IRA distribution, $6,000 can mean the difference between a comfortable month and a stressful one. It can mean the difference between being able to afford your prescription medications or having to choose between them. This matters, and you deserve to know about it. So let me tell you exactly what this rule is, where it came from, who qualifies, and most importantly, how you actually claim it. The rule we're talking about is officially called the Enhanced Deduction for Seniors, and it was created by something called the One Big Beautiful Bill Act, which was signed into law on July 4th, 2025, as Public Law 119-21. Now, you may have heard about this legislation in the news last year, but the coverage was all over the place, and most of it focused on other parts of the bill, like the provisions on overtime pay and tips. Very few news outlets really drilled down on what this means specifically for seniors. And that's a shame, because the senior deduction is one of the most impactful parts of the entire bill for everyday retirees. Here's the simple version of how it works. If you are 65 years of age or older, meaning you turned 65 on or before the last day of the tax year, you are eligible to claim an additional $6,000 deduction on your federal income tax return. If you're married and filing jointly, and both you and your spouse are 65 or older, that deduction doubles to $12,000. And this is in addition to the standard deduction for seniors already available under existing law. And here's what makes this really special. It stacks. It doesn't replace anything you were already getting. It is completely in addition to the standard deduction you've always taken. It's in addition to the existing extra standard deduction that seniors have had for years. It stacks right on top of all of it. Let me walk you through what that actually looks like with real numbers. For tax year 2025, when you combine the standard deduction, the existing additional standard deduction for seniors, and this new enhanced deduction, the total for single filers reaches $23,750, and for married couples filing jointly, it can reach as high as $46,700. Now, you might be sitting there thinking, okay, what does that actually mean for me in real dollars? Well, it depends on your tax bracket, but let's walk through a simple example. Let's say you're single, you're 68 years old, and your income for 2025 was $70,000, coming from Social Security, maybe a pension, and some IRA withdrawals. Without the enhanced senior deduction, your taxable income after the standard deduction and the existing senior additional deduction might be somewhere around $52,000. With the new $6,000 enhanced deduction added in, your taxable income drops to around $46,000. That $6,000 difference in taxable income, depending on your bracket, could put several $100s or more back into your actual refund or reduce what you owe. And if you're in a higher portion of that income range, the savings compound even further. That's real money. That's your money. And the IRS says you're entitled to it, if you claim it. Now let's talk about who qualifies, because this is where a lot of people get confused and where some folks mistakenly assume this doesn't apply to them. The first requirement is your age. You need to have been 65 years old on or before the last day of the tax year. For tax year 2025, that means December 31st, 2025. That's the starting line. The second thing you need is a valid Social Security number on your return. The IRS requires this to process the deduction properly. The third thing, and this is the big one people worry about, you do not have to itemize your deductions to claim this. Whether you take the standard deduction or you itemize your expenses, this enhanced deduction is available to you either way. I want to say that again because it's important. You do not have to itemize. You claim it through Schedule 1A, which is a new form the IRS created specifically for deductions from the One Big Beautiful Bill. Your tax software should handle this automatically, but we'll get to that in a minute. The fourth consideration is your filing status. You can claim this deduction if you file as a single individual, as a head of household, as a qualifying surviving spouse, or as a married couple filing jointly. The one situation where you cannot claim this deduction is if you are married but filing separately. Keep that in mind. And fifth, there are income limits. Single filers 65 and older qualify for the full $6,000 deduction if their modified adjusted gross income was below $75,000. The deduction is reduced by 6 cents for every dollar above that threshold and is fully phased out for single filers earning more than $175,000. For married couples filing jointly, the full $12,000 deduction applies with income below $150,000 and phases out completely above $250,000. So what is modified adjusted gross income? Basically, it's your total income from all sources, Social Security benefits that are taxable, pension income, IRA and 401k withdrawals, investment income, any part-time wages, before you apply your deductions. Your tax preparer or your software will calculate this for you, but it's a good idea to have a rough sense of where you land before you file. Now here's something that might surprise you, and it's one of the most common mistakes I see people make. Not just seniors, but everybody who files taxes. And that is assuming that because something is new, their tax preparer or their software already knows about it and will handle it automatically. Let me be very clear about this. If you are using a reputable, up-to-date tax software, the program will ask for your date of birth early in the process. If you are 65 or older, it should flag your eligibility and apply the deduction automatically. That part is good news, but here's where people still fall through the cracks. If you're using an older version of software that hasn't been updated, if you go to a tax preparer who isn't fully current on the latest changes from the One Big Beautiful Bill, if you file a paper return and forget to check the right boxes or fill out Schedule 1A, or if you simply assume someone else is handling it without verifying that yourself. Any one of those situations can result in you missing this deduction entirely. And the IRS isn't going to call you up and say, "Hey, we noticed you forgot to claim $6,000. It doesn't work that way. The responsibility is on you to make sure it gets claimed. So what do? If you use software, make sure it's a current version for tax year 2025 and that it includes the One Big Beautiful Bill updates. If you use a tax professional, ask them directly. Are you familiar with the enhanced senior deduction from the One Big Beautiful Bill Act? Are we claiming it on my return? Don't be shy about asking. A good tax professional will appreciate that you're engaged. And if they can't give you a clear answer, that might be a sign you need a more knowledgeable preparer. Now, I also want to talk about something that connects directly to why this deduction was created in the first place. Because when you understand the why, the how makes a lot more sense. Most seniors get a significant portion of their retirement income from Social Security. And here's a fact that shocks a lot of people. Depending on your combined income, up to 85% of your Social Security benefits can be subject to federal income tax. That's not a myth. That's in the tax code. The formula is complicated, but the short version is this. If you have income from other sources, a pension, an IRA, part-time work, investment dividends, and your total income crosses certain thresholds, the IRS can tax a large portion of your Social Security check. For a lot of retirees, that feels deeply unfair. You paid into Social Security your entire working life, and now you're being taxed on money you already paid taxes on. The enhanced senior tax deduction was created, in part, to help cover taxes on Social Security benefits for tax years 2025 through 2028. That's not Professor Kingsley's interpretation. That's coming straight from the tax preparation professionals who are working with real clients every single day. So if you are a senior who has been frustrated watching taxes come out of your Social Security benefits, this deduction is, at least in part, the government's response to that frustration. It doesn't eliminate the problem entirely, but it is a meaningful step in the right direction. And you should take advantage of every dollar of it. Let me take a moment here to also mention something that many seniors aren't aware of, and that is the fact that this enhanced senior deduction can be stacked with other tax benefits that already exist for older Americans. We've already talked about the additional standard deduction, but there are other provisions worth knowing about. There is something called the credit for the elderly or the disabled. Some seniors who are at least 65 or who retired on permanent and total disability may be eligible for a tax credit ranging from $3,750 to $7,500, depending on their income. This credit is often overlooked because it has specific income requirements, and a lot of people simply don't know to look for it. Remember, a credit is even more powerful than a deduction because it reduces your actual tax bill dollar for dollar rather than just reducing your taxable income. There is also the Earned Income Tax Credit. For tax year 2025, the maximum income to claim it is $68,675. Some working seniors, those who have part-time jobs or self-employment income, may qualify. It's worth checking. And if you made charitable contributions during 2025 and you're filing a joint return without itemizing, there's a new provision that allows you to deduct up to $2,000 in charitable contributions even if you don't itemize. That's another benefit sitting out there that a lot of seniors won't know to claim. The point is, these benefits don't exist in isolation. They layer together. And when you stack them properly, the combined effect on your tax bill can be quite significant. Now, I want to address a question that some of you are probably thinking right now, and it's a fair one. You might be wondering, if this is such a big deal, why hasn't my accountant already told me about it? Why haven't I heard about this on the news? Here's an honest answer. Part of it is timing. The One Big Beautiful Bill was signed into law in July of 2025. Tax filing for that year didn't really kick off until early 2026. So for a lot of people, the awareness about what's in that bill is still catching up with the reality of having to file a return that includes those new rules. AARP specifically expressed concern that many seniors would miss the new deduction simply because they were unaware it existed. The warning was public. But that doesn't mean it reached every senior's kitchen table. The other part of it is that tax news in general is often poorly communicated to the people who need it most. The IRS has information on its website. Tax professionals know the rules. But the average person sitting at home, especially someone who is retired, maybe not spending a lot of time on financial news websites, maybe trusting that their longtime tax preparer has it handled, may genuinely not know this exists. That is why videos like this one matter. That is why Professor Kingsley exists. You work hard your entire life. You follow the rules. You pay your taxes. And then when the rules change in your favor, you deserve to know about it. You deserve to be the person who walks into the tax preparer's office or opens their tax software already knowing exactly what to look for and exactly what to ask. So let's recap everything we've covered today, because I want to make sure you walk away from this video with a clear, practical picture of what to do next. The enhanced deduction for seniors is real. It was signed into law on July 4th, 2025, as part of the One Big Beautiful Bill Act, and is available for tax years 2025 through 2028. It is confirmed by the IRS. It is documented in IRS Publication 554 on Schedule 1A and on the IRS website. This is not a rumor. This is not a loophole. This is the law. If you are 65 or older, you may be eligible for an additional deduction of $6,000 on your federal income tax return, or $12,000 for a married couple filing jointly where both spouses qualify. This deduction is in addition to the standard deduction for seniors already available under existing law. To get the full deduction as a single filer, your modified adjusted gross income needs to be $75,000 or less. For joint filers, that threshold is $150,000. The deduction phases out gradually above those levels. You don't have to itemize to claim this. Standard deduction filers and itemizers both qualify. You claim it through the new Schedule 1A, and most updated tax software will handle this automatically once you've entered your date of birth. Make sure your tax preparer knows about this. Ask the question directly. Don't assume, verify. And look into the other benefits that may stack with this one: the credit for the elderly or the disabled, the earned income tax credit for working seniors, and the charitable contribution deduction for non-itemizers. And here's one more thing I want to say before we wrap up, because this is important and I don't want you to miss it. Right now, this deduction is set to expire after 2028. That means you have 4 years, 2025, 2026, 2027, and 2028, to take full advantage of it. After that, unless Congress extends it, it goes away. So don't sit on this. Don't say, well, I'll look into it next year. This is the year to act. This is the year to make sure you're filing correctly, claiming everything you're entitled to, and keeping as much of your own money as legally possible. That's not just smart, it's your right. If you found this video helpful, and I really hope you did, I have a simple request for you. Share it. Right now, before you close this video, think about one person in your life who might need to hear this. A parent, a spouse, a friend from church or from your neighborhood, a sibling who's been stressed about taxes. Hit that share button and send this to them, because the information in this video could literally save them thousands of dollars, and you'd be the one who made that happen. That's a pretty great thing to do for someone you care about. And if you have questions about your specific situation, about something I mentioned that you want me to dig deeper on, about any aspect of the senior deduction or the other tax benefits we talked about today, drop your question in the comments below. I read through every comment, and I use your questions to decide what videos to make next. So your voice genuinely shapes this channel. Speaking of the comments, I'd love to know, did you already know about this deduction before watching this video? Or is this the first time you're hearing about it? Type yes if you knew, and no if this is news to you. Let's see what the community says. I'm genuinely curious, and your answers help me understand what kind of information is getting through and what isn't. This is Professor Kingsley, and I'll see you in the next one.